My name is Ben Weiss from Flippa. I'm joined today with Jordan Richmond, VP of National SBA Lending at AmerisBank, one of our preferred lenders over here at Flippa. Excited to talk about all things SBA lending today with you all. If you are attending live, you can jump in, I think at the bottom of your window somewhere down there, there should be a little question and answer button, Q&A button. If you have any questions while Jordan's speaking, feel free to type them in there. I will roll through and relay those as we can. But I'm excited. It's going to be a good day. We're going to learn about how to buy a business with lending, which is just how everyone wants to do it. Right, Jordan? No one wants to spend their own money. Everyone wants to spend your money.
Yeah, that's a problem we can get into, but sure. Thank you.
Not how you should do it, but how you could do it.
Right. But no, I appreciate the introduction. And yeah, as you said, this is one of the more common messages to even just have in kind of your industry and your space, is that, people think about business acquisitions and buying a business. And yes, it's eligible with SBA. It's something we can do. And I feel like that in and of itself is a launch pad to talk about, how these transactions work. And yeah, we are a resource for Flippa.
Yeah, absolutely. Well, I guess without further ado, let's jump into it. Just so you guys know, Jordan and AmerisBank, they've been working with Flippa and all sorts of e-commerce and content and just digital investors, SaaS, whatever you've got, investors for quite a long time now. They know a lot. These aren't, just traditional bankers who are going to be scared of you if you don't, have an actual brick and mortar concept. So they're really excited to work with you and spread some information on how you can go about obtaining an SBA loan to acquire something on Flippa. So Jordan, I'll lend it to you for now. If you want to jump into this presentation, we'll do some Q&A right afterwards.
Yeah, we'll do just a quick little screen share, my PowerPoint. And while I set that up, exactly to the point you were just saying is this is what I do. This is not, the SBA program has been around for umpteen years, and buying businesses with it is a common thing. But yeah, you're exactly right. This is not the kind of thing where you're going to walk into your retail Main Street branch and ask to buy a business, especially if it's e-commerce or digital, and expect to get an approval right then and there.
Right.
But yeah, the SBA 7A program has been doing this forever, and this is, for any given quarter, more than half my business is business acquisitions and M&A. And yeah, we definitely focus in the digital and e-commerce space. That said, Ameris is we're a full service bank. They're headquartered in the Southeast, in Jacksonville and Atlanta, and there is a retail network. But yeah, this is specialty lending. This is what we do. And I'll just kind of leap into a very high level overview, talk about how we can use this product in the SaaS and digital e-commerce space, and then just go over some very brief scenarios. And like you said, open it up for questions and hopefully just give everyone a quick little overview.
Yeah, absolutely. I'm looking forward to it.
All right. So a little bit about Ameris. I'll just go right into what the SBA program really is. And yeah, the SBA 7A program was designed to make loans that would not be normally made by a bank conventionally without an SBA guarantee. The SBA does not lend the money. The bank lends the money. I lend the money. However, the SBA will then guarantee that loan, and typically they'll guarantee 75%. This year they'll guarantee 90%, and that's how we get comfortable with it. And typically, the SBA makes a loan, or when I use the 7A product, it's one of two reasons. It's because there's lack of collateral. If you have a $500,000 loan request and a $100,000 house, you're obviously unsecured. That's typically when I'll use when any lender or bank will use the SBA program, when there's lack of collateral or when there's a lack of historical cash flow. You go to a bank for a business, you want to typically see 2 years financials, 3 years financials. Most banks will define immediately a change of ownership as a startup. So if you buy a business, you're buying cash flow, you're essentially starting this new business. Another reason you need the SBA program, and that's kind of why we're here. But yeah, that said, typically what I lend on is for business acquisitions. I specialize in large goodwill deals. I think we excel in businesses that are about 500,000 to the very high end, 3.5 million, I'd say, was on the high end. The program will go up to 5 or 6 million. But again, in your world, Ben, lack of collateral is something that always happens, and we need to, mitigate that. So we like to keep that unsecured component a little bit lower.
Yeah, absolutely.
And that said, a common question about how these are used and what the funds are for is, we'll do SEO, we'll do e-commerce, we'll do SaaS. And, the common question, especially, you look at e-commerce or either, and they say, can I have money for inventory, money for working capital? And the answer is, we will pay for that. And, the financing terms are typically 10-year financing. Below, if you see in the flexible terms, that is very loose terms. And we can talk about, what a deal structure really looks like, and that kind of thing. But that is the loose financing scenarios, 100K to 10 million. For digital, I think the space really excels, again, 500K to about 3.5 million. And the 90% financing is another common question as well. People say, how much do I need to put into this deal? And the short answer is 90%, but the long answer is everything would have to be perfect to do a 90% deal where you're pledging a ton of meaningful real estate collateral. You have experience. It's typically not your first transaction. But 90% certainly on the table. And 1.5 million is a general rule of thumb too. We'll go up to, last year I did, I think maybe right around 2 million was my largest unsecured deal. The loan itself, the package itself, the financing package, working capital and everything was close to 4 million, but it was unsecured of $2 million and we had no problem doing that. And I can really unpack that and talk about, that a little bit more and give some kind of ideas about how you would structure a deal. Just quick, any questions around that though? I just want to make sure we're checking in and life is good with you. And
looks right now. I'm curious. I'm sure some of the new people on Flippa or into this space. When you talk about collateral, what counts as collateral in the digital world? Is it just money in the bank since you don't have a building to grab if things go wrong? How does that work?
Yeah, it's almost like we've done this before. This is exactly where I was going, so I appreciate that. So when we talk about the collateral. You're exactly right. The SBA has a very well-defined chart of collateral. Many people are used to, for instance, receivables you can lend on or possibly inventory. And the SBA really doesn't like either of those. They discount all receivables and lend marginally on inventory. But you are exactly right. When you're talking collateral, it's specifically personal or commercial real estate. It could be marketable securities. So, you could potentially pledge something, security-wise, stay in the market, that kind of thing. Or really cash is typically how someone's going to secure a digital deal. The SBA allows for FF&E and machinery and equipment, and there is a whole chart on how you margin that, but not on digital, And to put that in real terms, you have $1 million house, the SBA immediately will margin that at 85%. So your $1 million home value is now considered $850,000 in the eyes of the SBA. They'll subtract out whatever lien amounts are. So say you have a $350,000 mortgage, now you're left with $500,000 of collateral by SBA standards. So that would, you're looking for $1.5 million loan, you have $500,000 of collateral. For me, I mean, all things being equal, now we're starting to get somewhere from a commitment standpoint. You're pledging meaningful equity, you're pledging meaningful collateral. That's how you get a deal like that done.
Right. Yeah, it makes sense.
But and to really kind of dovetail into just a few things, because one of the most often conversations I have, I do presentations and I have speaking engagements often, and people's takeaway, and I don't want this to be the takeaway, is that you can go into a deal. They'll go online, they'll see the max loan amount is 5 million, they'll see the max, financing is 90%, and that's what they want. And when you look at the leverage ratio, it's really not a 10-to-1 leverage ratio. If you want $1 million deal, you're not going to get approved if you have $100,000 in the bank,
Right.
1 leverage ratio, a 4-to-1, really a 2-to-1 was the last file I put in. It was $1 million deal. The guy had, I think 500K post-transaction liquidity after he was putting money in. You need to be well capitalized. And I just don't want people to see that 10% and think that, then glom onto that and say, I got 100K in the bank. That's fine. You know,
I'm
you
gonna do $1 million deal. Yeah.
triple to quadruple that to make a bank, you know, think that that's palatable. And then the other thing, to exactly what you asked about collateral, and getting back to my point about that 10%, is you know, a good message to buyers is, you know, financing matters. You know, many times you'll be up against a cash deal. Many times you'll be up against a guy who's pledging real estate and putting, you know, 30% in, and that's competitive. I would rather, as a seller, I would rather close a deal with a buyer like that who's pledging meaningful equity and collateral rather than someone coming in with 10% with no home.
Right.
So yeah, my takeaway there would be, you know, look at going into a deal with more to get it done from the seller side and also to get approved from the bank.
Yeah, let me just jump in. I got a couple of questions starting to come in. One, well, I guess just so you can, just to clarify, because we've got someone asking, he's basically saying, so I think you must have mentioned it. He's saying to get $1 million, you need 500,000 in the bank. That's not true. It's just the more collateral you have helps, but I think every deal is individual. Yeah.
Yeah. So we'll look at it like this. I mean, it's a function of runway. It's a function of your monthly payments. And it's a really good question because, you know, people hear this and they say, well, what is the dollar amount? And like you just said, it's ethereal, but you know, let's take $1 million transaction. You know, the way I say it too is if you go into a deal with 10%, there's no recourse. There's no room to repair. You know, you have a swing of inventory. The business valuation comes in light. It takes forever. The seller wants to retrade. You know, God knows what could happen. If you're only planning on 10%, the deal's falling apart. You know,
yeah.
Why I say go into it 15% so you have some framework to save it. But to answer that listener's point directly, yeah, if you were to go for $1 million project, you know, say you have between, just call it 150K you put into it, then the bank looks at what your monthly payment is. They look at what your personal obligations are, and they look at everything, your kids, your spouse, you know, your living obligations, where you are, and they give you that kind of monthly runway. And you know, a safe amount of runway is probably 6 months. A good deal has a year of runway in the bank. So it's not only the equity you put into the deal, it's the post-transaction liquidity. And yeah, directly, you know, again, a leverage ratio of 3 to 1 is something you probably want to stick with. 2 to 1 is excellent. But I just don't want the takeaway to be, you know, 10 to 1, 9 to 1.
Right.
Going to get it done.
Right. I think that's the case. You don't necessarily need to have a 2 to 1, but 10 to 1 is rare.
Yeah. Yeah.
And then
go ahead.
I got one more collateral question before we move on. So we got here, guy Kevin here is asking, can you use a current cash flow? Can you use a current website that's generating cash flow as an asset for collateral?
Right. So yeah, getting back to that exact chart that the SBA uses, there's tangible and intangible assets. So, you know, to that listener's point, yeah, there is cash flow there. There is enterprise value, but that's not as the SBA deems collateral. The deal from a cash flow standpoint is in that intangible asset is helping service the debt, and we will look at that, and that will help you get an approval. But no, that is not SBA's definition of collateral. We're talking about hard assets that you take in liquidation. But again, to that listener's point, you know, you're looking about what you want to put in, how much you need to put down. You have a cash flowing existing website and you're pledging real estate, you know, and that website is helping support the debt and all things. You're strongly capitalized. There's a lot of collateral in there. That's getting you closer to that 10% deal because you're obviously an industry expert. You're running a deal. You're successful. You can show that you know this business runs. So
right on. All right, we got a few more, but I'll get to them after we get through more of this presentation. So let's jump to it.
Yeah, cool. Yeah, so sorry, went too far. Yeah, so just, you know, kind of tacking on the eligibility of this. People always ask, you know, what is eligible? You know, can I actually get one of these loans? And it's pretty simple. You know, they have the SBA has a size standard. As long as you meet the definition of a small business. And if the listener's actually viewing out there, those bullet points are a little bit off now. They go by what your NAICS code is, and they say what kind of industry you are, and they define you as small. So general rule of thumb, if you're below 15 million in tangible net worth, and you don't have net income of over 5 million, you're going to be eligible if the business is operating in the States and you are a U.S. citizen. There are some caveats if a U.S. Citizen and U.S. business corporation is bringing assets into the States. So in other words, a UK, Canadian business coming into the States to operate, that is technically eligible as well. So international transactions could potentially be okay.
Interesting.
Also. And but yeah, as far as the eligibility is concerned, you have a max loan amount of 5 million with the SBA. So as long as you fit that criteria, you should be okay. You cannot have defaulted on government debt, and there are credit score requirements. But typically, those are always met. People who want to be buying businesses and do that kind of have, they know they're going to get approved for general credit criteria as well.
Yeah, of course.
And then just very quickly, another very common area of conversation. Everyone wants to know what a loan would look like and how this works. And terms are always going to be on a goodwill deal like this, the kind of stuff Flippa is selling and processing, that they're almost always going to be 10-year transactions. Prime plus 2.5, prime plus 2.75 is really in general where the market is on deals like this. And yeah, I mean, that's it. Today, that rate would be, 5.75, 6%, somewhere in that area. And other than that, the SBA will charge a guarantee fee, which is, to guarantee the actual loan and for the SBA to back it. But other than that, a bank legally can't charge points. They can charge, an SBA packaging fee. So closing costs, legal fees, all that stuff should really be pretty parity from where you go from bank to bank. And yeah, I mean, it's a very standard product.
Yeah, absolutely.
Balloons.
Absolutely. There's always a couple of questions I'll just jump into. Just some real 101 stuff here. People always ask us when should they actually start the process? Is that something they should, pre-qualify for while they're searching around on Flippa? Something they should wait till they know what they want to acquire? How does that work?
Yeah, so I think a modicum amount of self-screening is important. If you go to a lender like myself, I mean, my first, asking a lender to approve a loan is like asking a surgeon for surgery. It's like, sure, just I'll cut whenever you're ready, So I mean, if you engage me, I mean, the first thing I'm going to want to do is just look at your personal financials, look at tax returns, and have an idea of what kind of business you want to buy and the amount of it, So I think to start, a little bit of self-screening up front is important, to get an idea of what those leverage ratios will work, what kind of payments and cash flow you're looking at, and extrapolate a general amount, a range. And then, yeah, to your point, I mean, people go on a search for, I have people who stay in the system for 2, 3 years, 4 years. So they really do need to get engaged first and have a very quick conversation, which could even be a couple emails saying, here's my financial picture. And then I spit out kind of a dollar amount and check their experience too, and make sure that'll work. And then, yeah, go out and go forth. And sometimes, Ben, like these questions, it's like pulling a cord on the doll, like when people ask me this stuff. But the way I put it is like, I can pre-screen it and pre-approve it. And I just want to get it to the point where if you needed a term sheet from a business, I could submit that and get that out to you 24 hours later. So you get pre-approved, you get on the search, you get me the financials, and then, next day, without even needing the buyer stuff, term sheet goes out and you have a deal and it's an easy approval of credit.
Right, which is fantastic because obviously things move very quick in digital acquisitions. So it sounds like it's important to at least get in touch and kind of know what you're in for. Yeah,
and not to pile on to your exact point, but I mean, like I was saying, I mean, cash buyers swoop in, more attractive buyers who are willing to put in, 20%, 30% with no seller note will come in. So yeah, that stuff is important to address up front.
No, absolutely. All right, I'll let you continue here with the options you got.
Yeah, this is kind of a really just a matrix from what we have on our marketing site. But yeah, this is really where I just kind of wanted to land for the viewers and try to make this a relatively short video so people will actually listen to it in its entirety. but yeah, this is just a list of some of the deals we've done recently, and I feel like this is a good place to kind of just talk about some deal structures. Commercial lending in general is case study oriented. So you can go over a couple of these, funnel some final questions, and kind of take it from there.
Yeah, absolutely. Well, I'll jump in questions just because I want to make sure people get covered.
Yeah.
Keith's asking here. I feel like you've mentioned actually a couple of times you've kind of just thrown into sentences about, oh, you're an expert, blah blah blah. So he's asking, does being an expert matter, or if you're new to online business, is that going to hurt you?
Yeah, excellent question. This is the kind of stuff that goes into the SBA 201. Maybe we'll talk about. So yeah, I like looking down the road and this stuff. Yeah, the phrase you'll hear is transferable skills, and that is what we'll underwrite to. And if the industry experience isn't there, the transferable skills really do have to be in spades. And really to that, I think Keith, really good point to ask this question, because if you look at the PowerPoint list of transactions, I can kind of really off some stuff here. If you go to that first one, the acquisition of a Canadian SaaS company, again, that was a foreign asset coming into the States, and that's why it's eligible to U.S. citizen, U.S. corporation. But yeah, this was this guy's third transaction. It was SaaS. It was synergistic, so it was the same client list. It was the same accounting. There was a bottom line savings too. That was an easy deal to do. That's the kind of deal we're doing at 90%. Now go down, about halfway to the list. Where is it? The 400K gymnastics studio owner acquiring Cree for business. That's a 10% deal. There was an existing going concern. So yeah, that's the kind of stuff we want to see. However, you look at the engineering firm we did, that was an architect. That's who knows the industry. He had good corporate experience. He was in the industry for quite some time. We're going to do that deal. What's another one? I'm doing like a franchise resale, and it's like a printing thing right now. And the guy has 30 years experience of B2B retail sales management. He was just doing B2B commercial sales, and that's what he does. And he's switching industry as you could with SaaS and e-commerce. But I mean, you look at the pedigree, and he's good to go.
Yeah, absolutely.
No,
yeah, there's a good question here, because I think a lot of people who are new and looking for SBA loans in digital, they're concerned what sort of business you'll loan out to. Patricia in particular is asking, can you get an SBA loan for a content-based business that's making money purely through ad revenue?
Yeah, we've done a few. I'm doing, well, actually one just fell apart. I did one earlier last year, and yeah, they come up less frequently than, I would say e-commerce is probably the most frequent one. Is also more frequent than content. But yeah, absolutely, we do it. My piece of advice on that is make sure, it seems that content sites are usually commingled with several different other businesses for some reason. I feel like e-commerce runs their own P&L, content doesn't for whatever reason. So the only thing I would say on that is we would still write a deal. Let's say the people have 5 different blogs and they're all spitting off money and they're only selling one kind of intellectual property, one piece of content. We would do that deal, but just bear in mind that as you're looking at this and the industry over SaaS and e-commerce, it's a risk. That is a riskier deal than just something that's SaaS that's been doing its thing for 10 years. You know what I mean? So just look at that as possibly needing more collateral, real estate collateral. Maybe look at it being, we might ask for 5%, 10% more equity. And also make sure that the bank can understand the financials within that space. But yes, 100%, we've done several and we'll continue to do so.
Yeah, so I would assume there's, essentially no type of digital business that you wouldn't be able to get an SBA loan on, as long as it's a legitimate, venture. Yeah.
Yeah, really good point. So if people want to Google the word prurient, because I didn't know it before I was an SBA lender, but yeah, we won't finance a business of prurient nature. We're not going to, Yeah, I mean, something that's unethical, scandalous, cannabis shops, that are federally illegal. Obviously, we're not going to do that stuff. So, and the last thing, I mean, there are websites generating money in not nefarious ways, but not necessarily, the most pure and ethical ways. And yeah, I mean, the bank is putting their name behind those deals. So I've looked at, especially some e-commerce stuff where I'm like, this isn't prurient, but I think it's making a political statement at the least of where the bank's, heart lies. And I, that's something I would rather stay away from.
Yeah, makes sense. I got another question here. I'm going to reword it a little bit because it's actually something I was wondering. This person's asking essentially what our process is or what your process is for determining an asset's value. But I would just like to know, if someone's working with you, with your bank and you personally, do you help them kind of determine what an asset might be worth to purchase?
Yeah. So super impressed by your viewers' questions, by the way. These are that's like SBA 301. So we could answer questions. We could literally talk about this for an hour, and I would love to. But yeah, the short answer is that there's really, I mean, there are two ways an appraiser will look at it. And yes, we do have to appraise the cash flow, and we call it a bill appraisal. It's a business valuation. And there are two ways a valuation company will do that. I'm going to really try not to get into the weeds, but it's either a discounted cash flow model or market analysis. Basically, we look at the cash flow as Flippa probably does, and then you assign it to a multiple. And the cash flow is the data-driven SDE, and you can show what the seller's discretionary earnings really are. And then the multiple gets a little bit ethereal, where you have to kind of look at the market and see what it's getting. But yeah, those two factors combined make your value. It can vary from my industry to Ben's. It's almost identical.
Got it. And that same person's asking, what's the range of your multiple typically?
Yeah, so that's a question better suited for a broker, I would say. I mean, e-commerce, what do I know? I don't want to start saying things that I can't take back, but
no, I agree.
In general, yeah, without saying a number, in general, I would say SaaS garners typically a higher multiple, and the more EBITDA you're spitting off, the higher it is, because then you're swimming downstream towards what private equity can pick them off.
Yeah, absolutely. I mean, we are obviously staring at that information all the time on Flippa because we see all the sales coming through. And yeah, there's no strict answer on what the multiple is. It really depends. But same thing, anything with like kind of monthly recurring revenue in the SaaS world is going to be worth a bit more. Anything that's a well-aged business is going to be worth a bit more, I tend to find, because it's just proven success. But yeah, there's no real answer.
Yep. And just a very quick caveat is just, banks really do look more, and evaluators do look at forward PE, but banks really do look at trailing PE. And you need to understand that, so your valuation might be a little bit off from the banks, but yeah, we're looking in the rear view, whereas always sellers, and sometimes buyers look forward earnings.
Cool. Let's close off. I got just one more question here that we can cover, and then we'll call it a day. And for anyone who's been here, thank you. And then we'll post this stuff on the website so you can go back and learn again if you need to. This one also coming from Patricia, asking, can I get an SBA loan at the time of closing if I set up a letter of intent where the seller agrees that I, as the buyer, pay down the down payment on standby to a seller over 6 months?
That's a good question. And I see where this person is going, because, you see this in commercial lending. A lot of times in franchise lending, quite a bit, where you have conventional franchise people who just, they have 15 units. Now they're successful. There's a ton of cash flow, and they just stroke a check because they want to buy stuff. And then that immediately gets tranched out to like a term loan. That is typical in conventional commercial finance, but that's more of a middle market transaction. SME kind of thing. With SBA lending, especially if it's your first, second, or any 7A transaction, you're gonna need to underwrite the buyer and the seller concurrently while the business is getting valued. So I mean, you're not losing that much time, but yeah, you're gonna underwrite the whole package, and then you're typically gonna wait about 30 days to close. If you did a valuation up front, 30 days I think is a fair time period. And then with COVID, guys, I mean, just the last thing I'll say with COVID, everything's taking longer. So, you know, that's cash sale or not cash sale. I don't think anything's that different with SBA versus cash these days.
Yeah, absolutely. There's a lot, as you know. There's 101, 201, 301, 501 classes we can take here. We can go to grad school together.
Yeah, 501s are genius.
You guys had some great questions. Jordan, you're fantastic as always. As I just mentioned a minute ago, we're going to post this up on our website along with some information, obviously, on how to get in contact with Jordan and his bank, AmerisBank. Anyone who's watching right now, I know there are a couple more questions still coming in, but we can't talk forever, unfortunately. But I will send all of you guys here an email probably next week when this goes up, and you can reach out to Jordan. And it sounds like some of you might be ready to already get going on this, so that's exciting.
Yeah, connect with me on LinkedIn. Yeah, happy to answer questions offline. And yeah, this was a lot of fun, Ben. I love the partnership. I love doing stuff like this. So a lot of fun. Hopefully it was good content for you guys. And yeah, anytime, let's connect.
Awesome. Well, thank you, Jordan. Thanks to everyone who was watching. And as Jordan said, reach out to him, reach out to me, and let's have fun. Get some money, buy some businesses, own your future.
Yeah, thanks again.
All right. Cheers, everybody.